Hi there, welcome to Kneppy In today's video, I'm going to look at a company that I think is interesting because this company is moving in all the right directions in regards to the business. Not exactly true for the share price, although in the long term, ever since this company did list on the ASX, the share price has been moving up. And I think one of the reasons the share price is moving up is because this company is growing. They're also operational cash flow positive, free cash flow positive, and profitable. And that company is Ansarada. Now, for full disclosure purposes, I am a shareholder of this company, and I hope to be a shareholder of this company for as long as possible. It's one of those companies that I think I have bought at the right time. And unless we see a significant downturn in the market, a significant recession, I do think this company will grow further. The only, and this is maybe I should leave this to the end, but my only concern that this company could be hit hard if there is a downturn, and that's because of what they do. So what does Ansarada do, and why am I a little bit concerned if there is a significant downturn in the economy? Ansarada's history goes all the way back to 2005 when a software developer, Andrew, and two accountants, Rachel and Daphne, were involved in an M&A deal. And what they found, and they found this very frustrating, was a lack of a virtual data room that they could use. And a virtual data room is quite important. And I don't fully understand how companies use virtual data rooms because I have no need to use it. But when there is a merger acquisition, every single individual in one company needs to look at the other company's financial state and all those stuff. And that's where a virtual data room comes in handy. So it just allows the other company of the deal, of the opposite side of the deal, and the individuals within that company allowed to see the books of the other company. So this software developer and these two accountants joined forces with an entrepreneur, Sam, and that's how Ansarada came to be. Not only the business, but also the name. So what they did is they took the first two initials of each of their names, Ansarada, and that's how the name Ansarada came to being. I find it very useful when I'm trying to understand what a company actually does to look at either their website or any presentations the company does release. So I found this information from one of their presentations. This is looks like page 14 of one of their presentations. This is their information governance platform. It just talks about the use cases, the critical information management, and also the products. So what they do with the virtual data room is very important in mergers and acquisitions. Now, in downturns in the economy, there's going to be less mergers and acquisitions. And that's what I am a little bit concerned about if we do see a significant downturn in the economy. On the other side of the fence, if we see a booming economy, there's going to be increasing. And when I say booming economy, I'm also talking about the stock market. If we see the stock market going on a tear, now, a lot of people will say the stock market and the economy are completely separate of each other. But the stock market is a subset of the economy. So you can't say, well, the reason why the stock market is going up while the economy is tanking is because the stock market is not the economy. That's not true. I actually did hear that a lot 2 years ago. The stock market was rising a lot around COVID-19. It's not exactly true that the stock market and the economy are separated. There's a lot of crossover between the two. So you can't ignore economic cycles. And that economic cycles do affect the stock market. That's absolutely true. But there's been a lot of misinformation out there over the past 2 years that the stock market and the economy are absolutely separated. And you can't look at one and derive any information about what's happening in that one and form an opinion about what's going to happen in the other one. So anyway, rant ended. So my only concern is during downturns in the market, in the economy, in the stock market, you will see less mergers and acquisitions. But in the booming stock market cycle, in the booming economy, there's going to be more, and that's where Ansarada will come to be. Now, more than likely, they do have solutions around that, but potentially companies give them a sort of a yearly revenue stream, no matter what the economy is doing. That's something they could be thinking about. Maybe that's something they are doing. So I'm not completely around how Ansarada derives all their revenue. But that's the one concern I do have about this company moving forward, particularly over the next few years, when we could, and this is only a could, be heading towards a recession. Now, Ansarada was formed in that year of 2005, and it took another 15 years before the company listed on the ASX. And this was sort of a backdoor deal. It wasn't really a backdoor listing because a company called the Dockyard made an acquisition of Ansarada, but Ansarada was the biggest company. So it was sort of Ansarada coming in and using the Dockyard as their avenue to enter onto the ASX. That was done on 9th of December 2020. So this company has been listed on the ASX for about 18 months now. So we do have about 6 quarters of history. I do prefer at least 2 years of history before I want to see if there's any trends in receipts. And we'll look at the receipts history later in the video. The current CEO is Sam Riley. He's also the co-founder, if you remember. He's the SA, the middle part of the name Ansarada. And so some of the other major shareholders are Andrew Slavin, 7.4%, and Netwealth have a 4.8% stake in the company. Current market cap of Ansarada at a share price of $1.76. Share price has pulled back over the past week, gives it a valuation of $157 million, which is not too stretched when you look at some of the financial information and data of this company. And the ticker code for Ansarada is sort of a boring, and I say that with all love and kindness towards this company, is a boring AND. Now, before I have a look at the March quarter Appendix 4C, I just want to go back 1 year ago to the March quarter of financial year 21. I believe that was financial year 21. And this would have been possibly their first Appendix 4C they did release. This is just after they did list on the exchange. And in this particular quarter, this could have been the second quarter because maybe they released the December quarter Appendix 4C because that was about 1 month after they did list. So this is their second quarter, and receipts to customers in this particular quarter, $9.8 million. And they were operational cash flow positive by $2.1 million in this particular quarter. So this is real business, generating money in their business, generating cash flow. That's exactly what we want to see in any business, because if a company can generate cash flow, positive cash flow in their business, and then free cash flow, that means the company can be self-sustaining and grow through the cash they generate in the business. And more than likely, they won't have to go back to the market for any capital raisings unless they do a significant acquisition. So that is one of the attractive things about Ansarada. In this particular quarter, they began the quarter with $21 million of cash, finish it with 21.7 million. So they do have a fair bit of cash on hand. Well, 1 year ago they did. They also spend $1.1 million in this particular quarter on intellectual property. If I remember correctly, intellectual property is just software development, stuff like that. I could be mistaken, but I think that's what that is. I did a little bit of research because I wasn't sure why a lot of these software companies were spending a lot of money, and some of these companies spend a lot of money on intellectual property. And I think it has something to do with capitalized software development or something like that. Now let's have a look at the most recent Appendix 4C for the company, and things are going pretty good for Ansarada. Receipts up to 13.4 million. Now, some of their spending has increased. So even though receipts did increase by $3.5 million, we also saw product manufacturing and operating costs up $600,000, advertising and marketing up $1.8 million, administration costs up $1 million. Now, staff costs were down not $300,000. They also spent $700,000 on non-current assets. Not exactly sure what that is, and another $1.2 million on intellectual property. So some of their spending actually did increase, which means even though they did have a larger influx of cash into the business, they were slightly more operational cash flow positive in this quarter than 1 year ago, and that number is 2.3 million. Now, the important number to look here also is the year to date. At this point in time, Ansarada is operational cash flow positive, almost $10 million for the year. Now, I don't want to oversell it, but that number is only $9 million. But still, $9 million of operational cash flow for this growing company makes Ansarada attractive at these current valuations, in my opinion. Now, let's have a look at how Ansarada's customers, subscribers, and ARPA, which is average revenue per account, have been traveling over the past year. So this is looking at 1 year ago and comparing it to this year. So we do have a growth year-on-year growth. Now, this is a little bit different than the information gave us in the last quarter. Actually, if I go back to the previous slide, which I haven't shown you. So in the previous quarter, they looked at the year-on-year growth and the quarter-on-quarter growth. And you can see the customers and subscribers, quarter-on-quarter was quite low, 0% for customers and 1% for subscribers. So keep in mind here, in Q2 financial year 22, subscribers or customers were 3,559. Let's just see how much that has grown in the last quarter. And we can see now it's up to 4,525. So I'm not sure why they've decided to discard the quarter-on-quarter growth, because we're seeing significant growth in customers, over 1,000 growth. That is significant because most of the growth we've seen in this business has been in the last quarter. Subscribers in this particular quarter, 7,000 or 2,792. If we go back to last quarter, it was up to 2,738. So not quite as much growth in subscribers. And average revenue per account last quarter was 1,408. And in this quarter, it is now up to 1,661. So nice growth in the ARPA. So I'm not sure why they have changed some of their viewpoints. Comparisons probably is the best word here. And just comparing year-on-year growth here is fine, but I wish I also provided the quarter-on-quarter growth, because it would be interesting to compare how they've grown from the last quarter. So for some reason, I don't think that is important. They've also provided some other information here, including adjusted cash flow from operations, and that's grown from 2.1 million to 2.4 million, but we already know that because I showed you that in the previous few slides. Now let's have a look at receipts history for Ansarada, and preferably to confidently determine whether there's any upwards or downwards trends in receipts. I want 8 quarters of history. For Ansarada, we only have 6 at this point in time, but things are looking positive for Ansarada. Receipts are growing. They've gone from 9.4 million in the first quarter after they listed on the ASX to 13.4 million. Now you might say, well, receipts did drop from last quarter from 14.5 million to 13.4 million. A little drop in receipts, quarter on quarter, does not mean there is a trend there. If we do see continual drops in receipts over the next few quarters, that's when I would become concerned. But I am quite confident that we will see receipts head towards 15 or 16 million over the next few quarters, just because of the trajectory of receipts we've seen in Ansarada over the past 6 quarters. Now onto the chart for Ansarada. This is the data chart from when they listed on the ASX way back in, was it November, December 2020. And one of the things I do, and if you don't know this, I like to wait at least 6 months before I really consider buying into IPOs or companies that just listed on the ASX. In Ansarada's case, it was sort of a backdoor listing or a backwards, what do they call it, a reverse takeover of another company. Because from when they listed on the ASX all the way to April, May of 2021, share price actually went down. It fell all the way down to less than $1 at one point. But then sentiment in this company changed after about 6 months. So that is that 6-month period. And we started to see share price rise from then and did move into a nice little uptrend. There's a little bit of volatility there. You can see share price could rise for a few months and then pull back for a month and a half, and then go another massive rise. So we saw that continually, big rises, share price pulls back, rises, pulls backs. But that's really normal when a share price of a company is in an uptrend. Unfortunately, the uptrend in the share price did break about 3 weeks ago, right on $2, and share price pulled all the way back to $1.57. And we have seen share price rebound over the last 5 trading days, and is right now at about $1.80. It's a little bit concerning that the uptrend has broken, but this just shows you the overall negative sentiment in the market. I am finding this company attractive at these levels because $9 million of operational cash flow in 3 quarters does tell you that this company is moving in the right direction. That's all I have for this video on Ansarada and looking at the March quarter for financial year 22. If you have any questions about Ansarada, maybe any other company on the ASX, I'd love to hear your opinions, your thoughts, your questions. So leave it in the comment section of this video. Otherwise, I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.